Hello and welcome to our Minds Money 5 at 5 show, which this week is sponsored by Goldseek Resources and Sonoro Gold, and is brought to you in association with Resource Global Network. For those of you that don't know, we started the first 5 at 5 back in April 2020, and 16 months on, we're now on episode, I think it's episode 91. So we've certainly been around for the last sort of 16 months. So it's good to go and see some of you here again. To make the show as interactive as possible, you can have your video switched on. To ask a question, you can submit the questions via the chat function, which is at the bottom of the screen, or you can also go and ask yourself to be unmuted. We can unmute you and you can ask your question live. For today's show, we have a great line of the speakers. They are John Deluce, CEO of Goldseek Resources, Kenneth and MacLeod, President and CEO of Sonoro Gold, and Peyvand, Bayzae, Investment Advisor at Global Mining Capital. So I think to go and kick things off, let's start off with a polling question. I think we were just talking beforehand that gold was up, I think it's at $33 today. I think Kenneth, thinking of like Kenneth was saying that just before we started. But looking ahead, just keen to see what everyone thinks about the current gold environment. And as maybe we're on the shift of a change in US monetary policy, is gold fair value? And I guess, how do you expect the price of gold to change over the next year? Whilst we're voting, let's kind of go to our panelists. So, Peyvand, if you had to describe the gold market in 2021 in one sentence or a couple of sentences, what would it be?
Well, one word would be volatile. I expect volatility to increase through the end of the year, but I expect it to end where it is now. Sorry, that was more than a couple sentences.
No, that's kind of like no problem at all. And do you have any sort of like predictions as to what you think will happen to the gold market in 2022?
I think we're going to see a little bit higher prices in 2022 as the world comes back and we see inflation pick up. But I've been wrong about price of gold before, so I don't, it's not a hard choice.
Sure, okay. Bringing in John from Goldseek, how would you describe the gold market in 2021?
Well, I think it was a much needed consolidation. We saw an explosive market last year and valuations got quite frothy. So I think you study any gold bull market in history, there's violent corrections along the way, and that's why a lot of people get shaken out. So I think this is a much needed consolidation. When that will end, it's hard to say, but yeah, we continue to churn that and we'll see how things go in 2022.
What do you think how do you expect the price of gold to change over the course of the next year?
Well, I think it's hard to time it, but I think it's going significantly higher for the purposes of inflation and monetary policy. I'd be surprised if we don't see it pass all-time high next year. However, it's hard to know how long the Fed can keep the inflation bubble muted. So I expect higher prices in 2022, but timing aside, I'm confident that we'll see much higher prices as a result of what's going on economically.
Mm-hmm. Kenneth, do you think that tapering the QE stimulus is still on the table? And if so, what does this mean for the gold market?
I think tapering is definitely on the table, but I don't believe it's going to happen in the next few months. I think it'll take a little bit longer. I believe that the impact of QE on the gold market is significant, but it is offset by the factor that inflation is becoming a much more serious issue than simply the ending of the QE. And so over the next year, I believe that as inflation makes itself more evident, especially in the United States and to a lesser extent in Europe, then I believe that gold will see an improvement in the price. Now, I don't think it's going to be dramatic over the coming 6 months, but long term, I think the valuation for gold seems very, very positive. And when I look at the resilience that's been built into gold over the past year, since it started to decline about a year ago, it is increasingly evident that the $1,700 seems to be a benchmark for consolidation, and it doesn't seem to want to go under the $1,700 mark. Now, I could be wrong, but I believe that this phase of consolidation is very healthy for the gold market. And over the coming year, what's my forecast? I believe that we'll certainly be over the $2,000 mark. I am not reaching for $3,000 mark at this juncture over the coming year, but I believe a healthy $2,000 plus over the coming year is within reason.
Bringing back in Peyvand, what role should gold play in the average investor's portfolio? What sort of like advice would you sort of like give?
My personal view is that it should at least be 5 to 10% of any portfolio, whether you're a retail investor or you're an institution, especially as the fiat currencies keep printing and keep having inflation. And yeah, then on the flip side, you have the cryptocurrencies, but none of them will ever replace gold. So this is going to be the fundamental base for every portfolio. It should be.
Yeah, and on that 5 to 10% being in gold, how would you further then divide that up? Would it be into gold juniors? Would it be into gold producers? Would it be into the royalty and streaming companies? Would it be into gold bullion? Do you have any sort of recommendations as how you'd further divide up your allocation?
It should be well diversified among all those classes. Juniors, seniors, and physical should definitely be part of every portfolio. With the seniors, you'd want to have them to add stability. With the juniors, obviously, you want the upside, and the physical is basically very much downside protection.
Sure. Okay. Well, I think that we can have the polling question up now, Elaine, and I think that a bit of a mixed bag there, but I think slight majority of 10 to 25% of you think the price of gold will go higher over the course of the next 12 months. So perhaps let's move on to our first presentation. Who we heard from earlier is John Deluce, CEO of Goldseek Resources. John is a former manager at Ernst & Young, specializing in mining and metals, who's worked with numerous NYSE and TSX listed intermediate mining companies. Responsible for the March 2020 Caskellen discovery, Melchior Resources, which led to a closing of 110 million option joint venture with Kirkland Lake Gold, and is a member of the Deluce family office, who has developed projects privately and financed junior mining companies for the past 20 years. We're delighted to have John and Goldseek Resources on the show. John, I understand Goldseek have 6 projects. Why should investors be considering you?
Yeah, no, appreciate it, Andrew, and I appreciate everybody's time to learn about our story at Goldseek. So jumping forward to our strategy. So we're Quebec focused, as we believe that Quebec is one of the best jurisdictions in Canada and arguably in the world. So we have a flagship asset, Beschefer, which is a near resource asset, which is complemented by 5 grassroots assets, 4 of which are in Quebec and 1 in Ontario. We feel that's the best combination, where you have a near resource flagship driving the majority of the budget, driving news, driving financing, but having a strong grassroots side of your portfolio to also contribute to growth. So I'll focus in on Beschefer, but we have about over 100,000 acres across the Abitibi in our grassroots portfolio as well. So looking at Beschefer, as I mentioned, our flagship asset. So this is an asset that we acquired 100%, an option to earn 100% from Wallbridge Mining in March of 2021. Since then, my team has been very busy modeling the gold zones to add credibility to what I promised investors last year when we went public. I promised investors that we would find and target a near resource asset to have as our flagship. And we weren't going to find that from reviewing peers of our size, because anything that was a flagship to a sub 100 million, anything near resource would likely be a flagship of a sub $100 million company. So we were looking at the majors, intermediates, and large juniors, and we landed on Beschefer with Wallbridge, which was Bechefer was overshadowed at the time by their Fenelon Gold project, which is 30 kilometers to the northeast. And they're due with their maiden resource there any day. So that offered the opportunity for us to acquire Bechefer, and we believe has, as I mentioned, significant near resource potential. So some of the historical results are quite significant: 56 grams over 6 meters, 13 over 8, amongst some other very favorable intercepts. But that doesn't mean anything unless you have continuity. And what we've started to show is the system has continuity. And we just completed our 5,000 meter starting program. We announced visuals from that program this morning, which included all 8 holes hitting the targeted B14 shear zone, which we believe and have modeled hosts the gold mineralization on the property. So in my promise to and target to my investors as us targeting a maiden 2022 resource, 60% of our initial program was resource drilling. So 25 meter spacing around high metal factor intercepts to try to build ounces in those areas. And then inferred type spacing with 50 meters to infill the structure. And then the blue sky potential in this program being the expansion drilling, where we have focused in on the high grade intercepts in the east zone. We believe the east zone continues and is well open for numerous kilometers to the northeast, and that's where we've focused in on our expansion drilling. So this provides a nice overview of our catalysts, and investors can hold me accountable for the rest of the year. So we just finished up our program. We'll have our results out in batches between now and the end of November, but I would invite everybody to expect the first results out within 1 to 2 weeks at the most. So we're very excited to get those out there ahead of the online Mines and Money event. So one thing that yeah.
No, sorry, please carry on, sorry.
So just 2 last items. So unique to us is our cap structure, 59% owned by management. So that's because we put $1 million of our own money into the company, and we have no cheap overhang with the majority of warrants and a price between 50 and 60. That includes my management team putting in over $500,000 at double the valuation that we're at today.
Okay.
So the one
Thank you very much.
wrapping, yeah. Well, just the final item, wrapping things up. Why Goldseek? Why now? When my family office looks at investments, we look at the same things across all juniors. Valuation, we're at a 52-week low combined with the market sentiment and flow through paper turnover, which is offering investors an opportunity to consider storing their IPO pricing. Structure, very tightly held catalyst with the 5,000 meters. Lyman industry, we pride ourselves on industry low G&A. The potential maiden resource targeted for 2022, and we're funded for this year with still $1 million left in the bank after our maiden results from Bechefer.
Okay, excellent. It's a fascinating presentation. Peyvand, I think you had a question that you wanted to ask John.
I was just wondering if you do any metallurgical testing or any bottle roll testing when you do your drill cores, or are you just focusing on drilling right now? Thanks.
So we lean on some of our neighbors and seen some examples in the region. So we haven't gotten to that point yet, but that will be part of our 43-101 process. So our technical team has started talking about that. And my lead geologist, Martin, was a senior geologist at Casa Berardi during its ownership by Horizon. So he's been through that process before, and it's been part of our conversations, but we haven't started into that yet.
Thank you.
Can you sort of tell us a little bit more detail about your exploration team and its just expertise?
Yeah, so we believe in, like I come from a finance background, we believe in building the teams around the assets that we're developing. So in terms of Bechefer, Martin Demers is my lead geologist. He was a senior management team member at Casa Berardi when it was owned by Horizon. And he saw that through development resource stage that led to a buyout by Hecla. So he's been through this process. That mine is still in production, only 40 kilometers to the southeast of Bechefer. So in a similar geological context, in a similar camp. So we were happy to bring him forward to the project and then him lead the rest of our team, given that success nearby and going through the project from grassroots stage all the way through to buyout that ended up being developed by Hecla.
There's a question being posted by John Zadkovich. Subject to the forthcoming 43-101 resource, is the company contemplating bringing the assets into production or divesting? If the former, please can you go on.
Yeah, so in terms of bringing into production, no, we are focused on building the 43-101 and building out the resource rather than looking for any production decision at this stage. In terms of divesting, our goal is to at least develop one of our grassroots assets through an option and or joint venture. So we are looking to divest in our grassroots side of our business. But in terms of Beschefer, our sole focus is to deliver on our promise of a maiden resource and continue to build ounces there. And we're still a ways away from looking at any production scenario at that project.
Mm-hmm. Would you ever consider properties outside of Ontario and Quebec?
Not personally. Like, as I mentioned, we pride ourselves on running and getting a lot out of our capital raised. We have a lot of infrastructure. We have a lot of teams in the province of Ontario and Quebec, and we don't have that in other jurisdictions. But the bigger thing is we think there's still enough value left in both provinces that's why, and especially showing that we were able to attract an advanced stage asset like Beschefer. They're very far and they're very hard to find, but there's still a few out there. So I think at this part in the mining life cycle, in this part of the bull market, we still prefer the jurisdictions that we know and are of top interest to the majors, just like we've seen through this mega merger with Kirkland and Agnico Eagle. There's a lot of focus on Ontario and Quebec, and deposits in those jurisdictions get a premium valuation, especially in Quebec over other jurisdictions, and that's why we focus on it.
Well, it's interesting you mentioned the merger, because that was posted in the chat box by Simon Cohen of RGM. So I'll go and ask the question to you first and then to the other two panelists. What are your thoughts about the recent merger between Agnico Eagle and Kirkland Lake Gold?
Well, I think it creates, I'm happy to see that this is a merger of two Canadian companies, and we haven't seen a foreign company merge with Kirkland to take the focus away from Canada. So I think it's in Kirkland Lake's view, it was the merger. If they were going to merge with anyone, it made sense with Agnico, given the synergies there between their portfolio in Ontario and Quebec. It really creates a premier mine producer with very safe jurisdictions, very high margin, and they're an absolute cash cow. So I believe this is a good sign for the industry. I expect them over the next 2 years to go on an M&A spree in Ontario and Quebec ahead of a resumption of the gold price hitting all-time high and then higher.
What's your view, Peyvand?
I actually don't like the deal very much. I don't think it's value credit for shareholders. In terms of what Agnico is getting, well, first of all, they were talking about not being focused on doing any acquisitions, but they were focused on organic. So it was a bit of a surprise with what they've done. We're looking at Kirkland, basically Macassa and Fosterville are not very long life. Detour is. In terms of value split, I'm looking at the March 23rd valuations, and Detour would have been about $5.5 billion of the overall transaction. Macassa about 2.6, and Fosterville about 2.6, and Macassa about 2 billion is the split. And they could have had Detour last year for 4 billion Canadian instead of 5.5 that they're paying for it now. In terms of Kirkland, again, surprised. I'm not sure, it basically reflects poorly on the growth prospects. If there is no growth prospect, I'd rather see them pay the extra cash as dividends. So I'm a downer on this one, sorry.
Yeah, I'm just kind of curious, as a follow-up question, I mean, how is it being received on the ground there in Canada? And I guess the question behind the question is it's always interesting whenever a merger is kind of like announced, is how it's received in the market, and then how people then sit sort of 6 months down the line. You know, I can remember the whole sort of like Barrett Rangold, and there was lots of it. There was a very, as far as I recall, very, very mixed reaction when it happened. Although then, say 6 months down the line, the market broadly seemed to have accepted it and said it was like a good thing. But I mean, what's it kind of out on the sort of like ground there in Vancouver when it comes up in conversations in bars?
So I think generally there's it's muted. We don't see anybody who's very much pro or very much con. Time will tell. I'm still hoping that the transaction won't happen, but I could be wrong.
Okay.
Kenneth, what do you see in Vancouver?
Well, I see it as a positive aspect. The fact that it is wholly within Canada, I believe as well with John that it's a very positive move for Canadian industry, and it keeps the focus on Canada, which is always a good thing from my perspective. But as far as the junior gold miners are concerned and the gold explorationists are concerned, it is a positive aspect because we come through a decade of dismal gold returns. Much of the exploration was curtailed over that decade. It's only recently started coming into its focus again. But the major companies are short of new product. They're short of exploration dollars over the past decade, and they're short of new discoveries. And so when it comes to companies like Sonoro, where we're operating in Mexico in a safe jurisdiction and building up a resource, it obviously at some point will become an attractive target for a larger company. It's too small right now for an Agnico to look at it, but it may be appropriate at some point for the mid-tier companies to take a look at these acquisitions. So I foresee that this Agnico deal with Kirkland Lake is a foreteller of more mergers to come over the coming 2 to 3 years. And that is always a healthy component of the industry because many junior companies aspire to be taken over. We aspire at Sonoro to bring it to production and squeeze the maximum value out of the project and out of the Cerro Caliche project. So we're not looking for suitors at this point in time, but maybe 2 to 3 years down the line, it could be a different story.
Okay. Perhaps we can just bring the next, actually, just before I bring up the next polling question, just one last question to both yourself, John, and both yourself, Kenneth, just to press you on your answers. So am I right in saying that for this merger, you are broadly in favor of it because it's like Canadian companies merging? If it had been different, if it had been a foreign mining company or non-Canadian mining company and a Canadian mining company, would you have not been in favor?
Oh, I believe that when it comes to jurisdiction, I'm agnostic. Canadian explorers are operating around the world. I probably challenge you to show me a country in which we're not operating. And so we have to think of it as any activity that enables the mining industry to become stronger and be able to enable the junior companies to keep on producing ounces that will eventually become either productive ounces in their own companies or be a takeover target at some point in the future. That's always healthy, and it doesn't matter what the jurisdiction is.
Sure. Okay. Let's have our next polling question up. Elaine, perhaps you can bring the polling question up. How important is ESG to you from an investment perspective? Once people are voting, how important is it to you, Peyvand?
Very important, and more so. And again, the industry's performance is actually quite disappointing. Again, sorry to be the downer.
Okay, that's a short answer. John, just coming back to you, can you talk us a bit about your ESG and First Nation policies?
Yeah, so ESG is, as I agree, it's very important in our stage of the exploration life cycle, being as a near resource developer. And a big part of this, focused in Quebec, is our relationships with the First Nations. And we have a strong relationship where we're operating, and it's a big part of why we choose Quebec, because the First Nations are very pro-mining. They have workforces, they have a lot of companies that provide services for the mining industry. And I'm proud to be partnered with various groups and continuing to review our project alongside them, so we all benefit together. And I think bringing them into the conversation at every level is important, and it creates a very strong working relationship that sees the success of these projects. And we cover environmental, other concerns that they have, so that we address concerns of all stakeholders as we go along, and everybody has input that's consistently heard and addressed.
Sure. And then just a quick question for you, Kenneth. I mean, when you're having presentations and one-to-ones with investors, are you sort of like getting sort of more questions on the ESG front about what criteria Sonoro Gold has?
Surprisingly, no. And I believe the reason is that ESG is a fancy new term for something we've been practicing for decades. You know, I go back to my days in the Congo, where we applied Canadian mining practices to our projects in the Congo, and have been following these practices ever since, and prior to that time as well. So I believe that Canadian mining companies in general have been following ESG without calling it as such for many, many years. Our environmental practices have been essentially second to none, with a few exceptions. But I believe that as we go forward, that the fact that ESG is now part of your portfolio and is part of all of the finance companies are going to be adhering to the ESG practices, I believe is a good thing. I believe is a very important thing, and I believe all stakeholders should be accounted for. And that has always been our practice, whether it be in Mexico or in California, British Columbia, or even way back in the Congo days.
Okay. Well, I think if we had the polling results up, I think the most popular answer amongst our audience was important. And let's go and stay with Kenneth. So obviously we've heard from Kenneth like a few times, but just to give a bit of a background about Kenneth and Sonoro Gold. I was reading a little bit earlier, the region around Sonoro's capital city, Hermosillo, has been known as a prime gold country since Jesuit missionaries state claims the property that would eventually become the La Colorado gold mine in 1740. And then Sonoro also lies within the 632 Golden Area Code in the northern part of Sonoro, continues to be one of the best locations for mining companies to find and profitably produce gold. And since 2040, Ken has been engaged as president and CEO of Sonoro Gold, a mineral exploration development company with a portfolio of exploration stage properties located in Sonoro State, Mexico. With a preliminary economic assessment on the Cerro Cliche project scheduled for completion in August 2021, Sonoro's management is transitioning the company to become a gold producer during the first half of 2022. So I think, Kenneth, if you're able to go and share your slides, we'd love to have an update from you.
Thank you, Andrew. Do you see the slide on the screen?
It's on the screen now, Kenneth.
It's on the screen. That's good. Okay, well, thank you very much for the great introduction there, Andrew. Make sure that you give me the nudge at 4 minutes, so I don't want to overstay my welcome here. But the Cerro Cliche Gold Project originated in 2018 with Sonoro, when we acquired the first component of a 1,400 hectare concession. You're looking at the central part of the concession here. It's about this area with the 3 hillocks in front of you. It's about 3 kilometers by 3 kilometers. And of the 47,000 meters of drilling we've done to date, 85% of it is within this zone here. And of the resource that has been defined to date, 85% is within this zone as well. The usual cautions that I have to show to everybody. Location-wise, northern Mexico, northwestern Mexico, 2 hours drive from the border into Arizona, and a 3-hour drive from the Cerro Caliche project to Hermosillo. And we're surrounded by producing gold mines. And so Sonora is the finest jurisdiction in Mexico for permitting and for actual mining of gold as well. And it is the #1 state in Mexico for gold mining. We just completed a PEA, and it's on the back of a 43-101 report we produced in July of 2019, which showed 200,000 ounces at grading 0.545 grams of gold equivalent, with the gold being 0.5 gram. And since then, we have completed another 25,000 meters of drilling, which brings it up to my 47,500, as I mentioned. And the PEA has been completed, and it was based upon producing a report with a crusher, a 3-stage crusher, which would be purchased instead of leased. We had initially planned to lease the crusher or bring in a contractor with a 15,000 ton per day crusher, and we were not able to find one in Mexico in time to produce this report. So we are still looking towards leasing or contracting the crushing, which would reduce the capital cost down from $32 million down to actually cut it in half. And of course, these costs would go into OPEX, but the payback at $1,750 gold is just over 2 years. The mine life as it stands right now is 7 years. And our initial plan was to go into production as early as possible, as early as could be realized with the drilling we've done over the past while, in order that we continue with the drilling program and pay it out of cash flow. And that is still the plan. Now, just to give you an idea of value as it stands right now, with a 15,000 ton per day throughput, the first 3 years, we would use the higher grades in some of the zones in order to be able to pay back the loan for the capital loan. And that would give us a net 56,000 ounces of gold equivalent for the first 3 years at a 74% recovery rate. So the cash costs at $1,227, all in sustaining $1,300. And if I can give you an idea of the initial 3 years, because of the higher grade we're producing, the cash costs come down to $1,159, with the all-in sustaining at $1,282. Now, the reason for the higher cash costs and the higher sustaining costs is all of the capital has been compressed into a 7-year time frame. Our intention is to continue drilling, and we will start drilling in the next 45 days in order to keep adding to the resource and increase the mine life to hopefully 10 years, 14 years. And of course, then the all-in operating costs will diminish because you're spreading the costs over a longer period of time. As far as the estimate is concerned, Micon International out of Toronto produced the PEA figures of measured and indicated of 350,000 ounces and inferred of 70,000 ounces at a grade of 0.41. Now, keep in mind that our intention is to, like I said, to continue. Our goal is over the next year to hopefully be able to demonstrate the potential for over 1 million ounces, and over the next 2 years, hopefully, because there is the great potential for a much, much higher area of mineralization in other parts of the property that we've identified. So Micon also estimated a further potential for 200,000 to 360,000 ounces of gold and a fair amount of silver, up to 3 million ounces of silver in zones outside of the pit shell. And the pit shells are identified with the dotted lines, and this map is not very good. I'm sorry, John. I think I should have your graphic artist working with us and producing these nicer maps that you have there. And anyhow, the pit shells are shown in outline, and the area outside of the pit shell where we've done some drilling but have not identified a resource as inferred yet, but we will with additional drilling in my mind, then that could add up to another 360,000 ounces. So our initial goal of 1 million ounces within 3 years, it could be realized. This is the area where most of the drilling is taking place around the Hopmanesa zone. And this is where 85% of that resource is situated. In fact, 95% is situated here, with a couple of pockets at Veta de Oro and Rincon. And so we have a huge amount of area where we've identified parallel structures with gold-bearing zones in them that we feel confident we should be able to expand the mineralization. And I think the area we mentioned in a news release a month ago, windows where we've done some surface work as a result of building new roads into hitherto unreachable areas because of the steep terrain and overburden. We now are seeing really good grades at surface of 4.9 grams, 9.9 grams of gold, and some other areas as well of 9.4 grams. These are all areas that showing good indicators of gold at surface, and the likelihood would be high that we will be able to get some good grades at depth as well. So activities over the next 18 months are shown on here, actually 15 months, and we fully anticipate that by the end of next year, we should be in the production phase. Now, I think in your introduction, Andrew, I think we were a little optimistic about being in production in the first half of 2022. The reason was the metallurgical testing took several months, three to 4 months longer because of COVID delays and because of the fact we decided to leave the column leach testing for a longer period than initially anticipated. Anyhow, we're comfortable with stating 2022 production is within the realm of reason. Structure on the company, 102 million shares issued and outstanding, and management control about 22% of that, and other close and strong investors control another 25%. So close to half of the company is in long-term hands that are close to the company. So that's a summary on Sonoro. We're now in the process of preparing for the next phase of drilling to keep increasing the resource, and we're also talking to various parties for funding the construction, which would be either on an EPC contract or a royalty structure or other forms of innovative structuring of the capital to go into production so as to minimize the amount of dilution to the shareholders. Thank you, Andrew, and the team for enabling me to present this today, and I'm looking forward to any questions you may have.
I think we've got a couple of questions from yourself, Peyvand. Would you like to ask your 2 questions that you've got?
Sure, if I may. Kenneth, thank you for that presentation. I'm delighted to learn about your company. Political risk is one that valuations are showing the market is starting to be worried about. And I'm just wondering how it is on the ground and whether you're sensing anything that indicates resource nationalism in Mexico.
I've heard of it in certain areas, and political risk is a severe component in the southern part of Mexico. And so in Chiapas, for example, would be very difficult to permit a project there. Sonora is reliant on its gold mining, and the political infrastructure in Sonora is very, very keenly interested in continuing to support the mining industry. And Semarnat, the environmental agency, has the big issue over the past 18 months with COVID is they've had their funding cut, so they're taking longer to approve the permitting for projects such as ours. And so, but at the same time, through our dealings with Semarnat, the folks that are actually going to be handling the file and hopefully approving it over the coming months, they're telling us that it's business as usual. Yes, it's taking longer, but we are obligated to respond to you within 90 days from the time you submit your application, and then you have another 90 days to respond to them. So I believe that while there are political risks associated with certain parts of Mexico and criminal risk associated with certain parts, we have not been affected, and we don't see and we don't anticipate any showstoppers as far as the environmental permitting is concerned, because we're surrounded by producing mines. It's a disturbed area, and the rancher that controls the surface rights is very supportive of the project. So all in, I'd say we stand as good a chance as any jurisdiction in the world of getting it through in an appropriate 6 to 9 months of time.
And if I just may complete, my second question was with respect to going from a PEA into project construction. Are your financiers not keen to see a PFS and an FS? I mean, because all the companies would love to bypass them, but financiers are typically quite strict about that. So any feedback you can share is appreciated. Thank you.
Okay, Peyvand, that's an excellent question. Some financiers won't touch a PEA. That's it. It's they're not allowed by their code of conduct to do so. So there are other financiers that are looking at it from the point of view of we want to be a partner with you. You know, whether it be a royalty structure, whether it be an EPC contract, whether it be some other innovative forms of offtake of the gold and the silver. There are many companies out there that are non-traditional as far as financing is concerned that we are talking to. We have currently, I believe it's 10 confidentiality agreements with companies that realistically any one of them could finance the project, but we have to narrow it down over the coming week or two to 3 or 4 strong contenders. And I believe it is financeable. The good thing is I can point you to other projects that have been financed. Minera Alamos with their Santana project in Mexico been financed without even a PEA. And Argonaut have financed La Colorada without, they did it with a PEA as well. So it is doable. And but it just takes a little bit more ingenuity than going to CIBC and to saying here's my feasibility study.
Question posted from Jacob Ambrose Wilson of RGN. Kenneth, as an explorer heading into construction and production, how are you building in the principles of ESG into your operations?
Well, we've been talking to local people ever since we started the project. We have incorporated as many local people into our workforce since we started the project. So we have a good relationship with the people in the town of Cucurpe, 15 kilometers distant. And many of the people that we have operating also come from the town of Magdalena, 45 kilometers away. We keep a good relationship with the agency such as Semernet that we will be relying on to provide the environmental permit. And so as far as the rest of the environment is concerned, we have done studies to make sure that there are no plant species or animal species that could be of concern, and we found none. The water, we have taken great care to make sure that the water supply in the region is not disturbed, and so we don't anticipate that the ore at Cerro Caliche and the waste rock at Cerro Caliche will cause any contamination because there's no arsenic present in the system, in the structure. And there are no other contaminants that we can classify as being of concern. So when it comes to environmental permitting, we have enough experience over the past 30 to 40 years of building mines in Mexico and elsewhere. And we don't anticipate this one to be extraordinary in any sense.
I was reading one of your recent reports and it talks about finding multiple vein windows. For those of us amongst us who are not geologists, can you explain what that actually means as an opportunity for potential investors, why that's attractive?
That was an interesting phrase we use, vein windows, because there's no such thing as a geological term called the vein window, I don't believe. But we wanted to explain to the investors what the heck we were doing. And so as we were building roads into this new area, we were finding that we were crisscrossing these vein structures that were yielding grades of up to 10 grams. And so, but how do you describe that in a news release that makes sense to the investor? So we called it a vein window because these areas, as you're crisscrossing up the hillside, you're coming across these pods of high grade at mineralization at surface. And so they're really a window into what may lie below. And so you got to have a window here and another 100 meters. You've got another window, another 100 meters, another window. And so they give us a glimpse into what may be hosted in the rock at depth. So we believe that these are windows on future mineralization that we will confirm with the next round of drilling.
Okay, seems as if you've come up with like a whole new geological term there, Kenneth.
Maybe.
Maybe. Another question as well. I mean, again, for people listening in who probably don't have the same knowledge of Mexico as you do. I mentioned in the introduction this historical 632 postcode. Who else operates in there?
Well, to the southeast of us by 8 kilometers on strike, actually the same structure is the Mercedes mine, which is operated by Equinox Gold when they acquired the Mercedes mine recently, and they acquired Premier Gold. So right adjacent to us on the west side is the Cerro Prieto mine. It's been operating for about 9 years. It's a open pit, heap leach, operating successfully. To the north of us is an even larger project, which is being developed by Agnico Eagle, called the Santa Gertrudis project. And when they acquired it in 2017, it was $80 million US, plus they paid $12 million US for the royalty. So $92 million US at the time when gold was at 1,250. Well, they've been drilling extensively since that time. And I'm not too sure what the latest is as far as resource is concerned, but I believe in the next couple of years, they will be making a production decision on the Santa Gertrudis mine. And that'll be, a fairly substantial mine. And it's good. Agnico's a good neighbor to have. In fact, we share the same access road as Cerro Prieto mine and Agnico does for Santa Gertrudis. And off to the west is the San Francisco mine. And that's been operating for, I don't know, a decade or more. And we have another project called San Marcial that's on the same structure as the San Francisco mine, and 20 kilometers to the east. It's drill ready. We don't have enough personnel to be able to operate both projects at the same time. So that's why we're focusing on Cerro Caliche. But San Marcial, we will tackle that next year.
Okay, excellent. Thank you very much for that. I think that brings us to the end of today's show. So thank you very much. We had some, two really, really exciting projects, Sonoro Gold and John Deluce for Goldseek Resources. Also, many, many thanks for our investor guest, who is Peyvand Bayzae from Global Mining Capital. Please join us at the same time next week when we'll have another 5 at 5. This time we'll be focused on royalty and streaming companies. So please don't miss us. That will be again at 5 p.m. London time, 12 noon East Coast, 9 a.m. Vancouver time, and look forward to seeing you next week. Thank you very much and goodbye.
Thank you, Andrew.
Thank you.
Thanks very much.